We're going to do a brief video on SP500 bear market, and we've got a daily chart up here for you using our proxy of the S&P 500 E-mini futures contract. That's the ES contract, one of the most liquid futures contract in the world. And we've got a 5-day moving average on here, a 20-day moving average, and a 200-day moving average. We're taking a look at a chart that for some reason has not updated, but the price is actually low for the day is 36.75 and 36.76, and that is right about here where my crosshairs are. And as you can see, it's sold down tremendously low today. Our support is all the way down here at 36.39, but we're within easy chip shot of that. We can see that from about August 16th, we bounced off the 200-day moving average. This is in a really nice little bear market, and it's in a decline in a bear market. This was a bear market rally. Now we're in a bear market decline. We get great respect for the 200-day moving average so far. This was probably short covering rally, but in general I would say it definitely respects the 20-day. If you take a look, these are short covering rallies here, but look how beautifully it respected it there, respected a great little rally here, and now is respecting it, I would say, reasonably well on a decline. Our 5-day moving average is much straighter than it normally would be. We're having a really severe sell-off. Remember, the price is actually right about down here where my crosshairs are. So we're in a deep bear market rally on this SP500. The prospects for it rallying anytime soon, the best way to look at it is day by day. You have to say, okay, we have support down here at 36.39, and that's our next target to see if that holds up. If we don't stop right around here at this 30, let's call it 37.25 level, come across for a week or two, get the moving averages up underneath it and rally back to the 4,000 level, then we're probably going to hit this 36.39 and probably go through it. So that's my, for entertainment purposes only, that's my current analysis of it. We need to stop about 37.25, go sideways for a couple weeks and rally up to 4,000 to stop this bear market decline. If we don't, we're going to probably almost certainly test and break the 36.39 and go down. You can see if you back this up, there's really not any great support until you get all the way down here to 32.25, and that's not really great. That's just the beginnings of some support down here. So that's what I've got for you. Let's take a look and see what RBAM research says today on this. We do cover this in two separate places. Let me just pull it up real quick. We cover the SP500 both as a, this is going to be the futures contract, and we have listed on a 30-day hold trend following system. You can see we're short here today at 38.33, which I do not think the market got that high today. As a matter of fact, let me see, 38.33. No, it did not, but it does say short on there for the trend following system for the SP500 today, and these are out for today, the Friday the 23rd. And then this is algorithmically generated prices, but they are trend following. The other ones I'm going to show you right now are algorithmically generated, but they're not trend following. Here we are again, SP500 ES futures contract issues. Let's see here, a buy for today at 37.56, and I checked this earlier. You could have bought that and it would have gotten a few, like 4 points I think on their rally. And then these other ones I have not checked to see if they got in the market today. Some of these, the high was so far today is 37.83. So all of these look like they would have been hit. But keep in mind, these are all for entertainment purposes only, and you trade at your own risk. These should only be used for entertainment. But I do believe this one got back in the money. I'm not sure about the rest of these today. Keep in mind, 1-day hold means you close the next trading day. 2-day hold means you close the second trading day. 5 trading days, 10, 20 trading days. So there's plenty of time for these to work out and get back in the green if they're in the red right now. But and this one definitely would be. But keep in mind, these are only for entertainment purposes only. You have to trade at your own risk. Can't use them for anything other than entertainment. These come out Monday through Friday, and they also come out, you're going to either get a long or a short Monday through Friday before 7 a.m. This is the futures contract for the S&P 500 on the Chicago Mercantile Exchange. You can get everything we offer, 190 plus stocks, the major forex pairs, BTC crypto, the S&P that I just showed you, as well as crude oil, gold, and T-bond futures at rbamresearch.com. Absolutely no price No credit card required. There's a link in the description below. You just follow it over there and put in your email address to get access to all of it for free. If you like this video, please click the like button. If you want to subscribe, please do that as well. If you have a comment on moving averages, please leave it for us in the comment section. We'd love to hear from you. Keep in mind that everything you've seen or heard on here, my commentary and the entry prices, are all for entertainment purposes only. You can't use them for anything other than entertainment. You should always do your own research, and you definitely trade at your own risk.